Hello and welcome everyone to this week's Gold and Silver Club end of week review for the 11th of April 2014, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the commodities. We'll be looking at gold, silver, oil, natural gas, coffee. We'll be looking at the top trade of the week. We'll be covering live market commentary and technical analysis. We'll also look at the week ahead, the 6 key news announcements you need to watch out for commodities over the next week, and of course answering any questions you may have on today's call. So this week we have seen gold prices hit 2-week highs following the FOMC, the minutes that were released midweek. Gold price eased its 3-day rally on Friday following the release Wednesday's FOMC minutes. The Federal Reserve's Open Market Committee, FOMC, provided from their latest meeting the dovish side, revealing that the Fed played down forecasts by some of its own policymakers that interest rates might rise faster than they previously predicted. The Federal Reserve Board of Governors unanimously voted to scrap a threshold that would hike interest rates once the unemployment rate hit 6.5%. So according to the minutes of the Fed's March policy meeting that was released on Wednesday, assigned monetary authorities are growing concerned over low inflation rates. So in the past, the Fed had indicated rates were set to rise when the unemployment rate hit 6.5%, provided that figure accompanied a 2.5% inflation rate. So the current unemployment rate stands at 6.7%, not far from the previous threshold, though labour markets remained slack and inflation remained well below the 2.5%. The Federal Reserve decision to do away with its rate hike threshold left markets convinced that interest rates will remain low for some time to come, even after the central bank winds down monetary stimulus programs. So low borrowing costs weaken the dollar, thus making gold an attractive hedge, driving prices to a 2-week high of $1,325 an ounce. We'll take a look at that very shortly on the technical charts, and we'll see really where gold is heading next over the course of today and as we go into next week also. So before we have a look at the technicals and the major news announcements, I'm Phil Carr, professional trader, and speaker. I'm co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that can give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial TV. So that's a bit of background on the Gold and Silver Club. So we'll just take a look at the gold price at the moment. We're currently trading at $1,319 an ounce. So we are up a little bit. We had a bit of a dip overnight and we've just regained that. We're not far away now from the 2-week highs here. So we'll take a look at the charts very shortly. The top trade of the week using the Gold and Silver Club signature strategies. We actually had a very strong setup here on the weekly charts. You can see here where we've managed to get a 170-point gain here this week on a nice breakout that we've had on gold earlier this week. So the risk on that trade was 60 points, $600 risk for each lot traded. The reward on that trade, 170 points, 1,700 US dollars per lot traded. We'll show you that setup very shortly, and that was a 2.5 to 1 risk to reward on that trade. We came up and hit our profit target just bang on a Fibonacci level. So we'll talk you through that. With that, we'll go over to the live market technical analysis. We'll take a look at the charts at the moment. There's some interesting setups already. So let's just share my screens with you and we can take a look at some of the technicals which are lining up today on the commodities markets. The first market we are going to take a look at is in fact the US dollar index. So I'd like to point out here the US dollar index, we had a really nice sell short setup from Friday's non-farm payroll, and this week we've just continued to break lower every single day. You can see here we've had 5 days of consecutive lows. We've actually come down to a profit target on the sell short here at the 79.40. This is a major Fibonacci level for the US dollar index. This, you can see actually the inverse correlation, if I put it on the daily here, that we've had with gold, as the US dollar index has been selling off. Gold has in fact had a rally to the upside. So we're at an important decision point now on the US dollar index, whether it's going to hold onto this support, which we can see is just about, we triggered ever so slightly lower at 79.37 yesterday. You can see where we bounced along this major support line, 1, 2, 3, 4, 5, 6 times now. This is going back to mid-March here as well. And this level is really key. So let me just talk you through this and what we're seeing here. So what I would expect in terms of the next move on gold, if we get a breakdown here from this, so you've got a major support line on USD index at the moment. If we are to get a breakdown here and break below 79.41 today, the next major level here is roughly about another 40 to 50 points low. We're going to be coming down to the next major psychological level on the US dollar index, which is the 79 level. If we do that, we will see gold break out. We should see gold clear 13.25. The next major resistance there is 13.35 if the US dollar index breaks down. If the US dollar index though gets supported here and we see a reversal, which would be counter trend at the moment, all the major moving averages are actually continuing to show a sell at the moment. But if we do see a reversal here and we get a move back up, first of all 78.6 and then up to back to the 79.90 level and around about the 80 level in the US dollar index, if we can get that sort of a move into next week, that will really halt the upside breakout that we're seeing on gold at the moment, and we will then see gold come down. So we're definitely at an event area for the US dollar index. Going to be watching this very closely today to see whether we get supported or whether we get a breakdown. That will give us the next move here on the gold markets. Let's move over to gold. This is where we had a nice breakout above last week's high, 1306 level, and we've since then had circa 170 point move. And you can see we've come right up to our profit targets here, major Fibonacci levels at 1325, whole cluster here. We can see we also have a V-shaped reversal pattern at the moment on the gold market, which is looking like it wants to break out. But here is our V-shaped reversal. Okay, and this is where we are starting to break out. You can see that triangle, that pattern. But it's looking good for gold. It is developing a hammer here, and you can see 1325, the major resistance level for us to get through. So what I'm looking for at the moment is a break of 1325 and just come up and hit the next resistance here, which is about a 100-point move here. So that's what I'd like to see. If we get a failed move above 1325 and it provides too much resistance here, what we could see is a break back down below the 50 MA and back down to retest these lower levels, 1306, and come back down to the lower end of this channel. It looks more likely, especially with this V-shaped reversal pattern, that we will continue to break out to the upside for the short term anyway. So that's going to be a great top trade to be looking out for today and as we move into next week too. As we move over to the other metals, you can see we've been discussing this for quite some time, the copper market. Copper, we did get that same V-shaped reversal pattern. We broke out. Copper is just a really slow grind at the moment as it's trying to really to bottom out at the moment. We are seeing it. This is a much longer term swing trade at the moment. It's just slowly by slowly managing to build a bit of a base here. We can see the 50-day moving average is getting closer now it's just up here, 3.1245. If we can see the copper market clear above the weekly and monthly highs here, so if we can get it, actually if we go out to the monthly at the moment, we're developing a nice hammer. Just have a look at the weekly here. Yeah, weekly on copper is looking good currently for a potential for a bottoming out pattern here. So we are just liking this for a longer term move to the upside at the moment on copper. We can see each time it does retrace, it is forming a channel here as well, upward trending channel. And I would expect to just see copper continue to grind up and then one day just produce a huge move to the upside in a daily move. It will probably do about a week's worth of gains in just one day if you are in the trade to actually catch that. So copper just grinding out. It's grinding to the upside at the moment. Silver, similar situation actually on silver here. Let me just bring that up on a big chart for you. It is slowly starting to form a bottom here as well, similar to copper. It's not doing as well as gold. Gold is doing the best out of the metals at the moment out of those three. But we can see we're starting to form a bottom here as well for the silver market. We got a bit of a retracement last week, but the key level which would have seen lower prices was a break of 1950. We didn't break through that level, and we're just continuing to grind up. Again, another swing trade position here, not really great for day trading. This gold much better for day trading, but silver is good for those longer term trades we're looking to just hold at the moment as we form this base on the silver market. Natural gas was a great trade yesterday. We got a really good breakout on the natural gas inventories. We finally got above the 50-day moving average. We've been discussing this with our live trading room, all our students just yesterday, and we did get that breakout that we were looking for. We had a nice channel here which was forming actually on, you can see this on the 4 hour. We had this nice, you can see very clear just channel as the price is ricocheting, just as it's forming higher highs and higher lows in this channel. We did get a break above the 50 MA, and really we're seeing, if you look at the weekly here, we did produce a nice buy signal on the weekly, and we've come up and hit one of our profit targets just shy of the Fibonacci level here, 4.720, and we'd just like to see this continue to grind to the upside at the moment on natural gas as it starts to form a bit of a base above the 50 MA here. So that's what we're looking at for natural gas. WTI here and Brent, they've not been too active in the last couple of days. We had some good trades midweek. I'll be looking at Brent at the moment. I do like this trend channel. Brent does tend to follow trend channels very well. You can see here we've got, this is where we bottomed out at the beginning of April. Got a little bit of a channel starting to form here. And you can see if you actually pull out this channel, this trend line, we've got a bounce just around the key moving average here, just above the 106.92 level, forming a little bit of a hammer here at the moment. You can see it's spot on here, probably better to view it on this time frame. And if I put it on the 4 hour, I would expect a potential bounce here from Brent today, waiting for that to get confirmed, and then a move higher. So from 107.16, we may get a move here up to, it would be fairly reasonable to get a 100-point move, I'd say, back up to the weekly highs of around the 108.16 level. So that's what I'm looking out for at the moment on the Brent market. So that's definitely one to watch today. If we look over to WTI currently, WTI, we had some great trades midweek actually on WTI as we triggered. You can see some nice moves. We've got a nice hammer here midweek. Had a huge surge up to around the 103.40 level is where we've found resistance. We're just pausing a little bit at the moment. I think the better plays right now are definitely Brent and natural gas, and we're just waiting to really see which way WTI is going to break next here. If it's going to just do a little bit of a pullback for some profit taking, or whether it's just going to continue its surge upwards here. So it's having a little bit of a pause at the moment, WTI, after some big breakouts to the upside. You can just draw an additional trend line here as well as we see the market just continue to grind higher. Other markets that we want to take a look at, definitely the coffee market has been good to us this week. We had a really nice move based on the weekly chart here as well, had a breakout which has given us roughly, just go back to that and just measure the points for you. We came on here but hit our profit target this week, 190 points on that trade to the upside. Coffee getting very near to its 2014 highs here at 209.20. That's going to be the next key level for us to break really on the coffee market. So we're not too far away from that at the moment. The momentum is very much to the upside. Pullbacks are being seen as buy opportunities. So we are monitoring this for a breakout above the 209.20 level. Also, if you take a look at the wheat market, wheat has had a bit of a pullback. Go over to the weekly here. You can see where that inverse hammer did. We saw some sell-offs after that was breached the low of that. And we've just continued to form a lower lows here as after we topped about 2 weeks ago on wheat. We are in a bit of a downtrend at the moment, short-term downtrend on wheat. We're looking for potentially some lower prices here at the 642 level for a breakdown towards, again, the 50 MA. and also to just come down to a major Fibonacci level below. It's pretty straightforward market to trade wheat. You can see it's just grinding down low as the overall trend is short term for a sell here. So wheat, we're also very much one of our top trades to keep an eye out at the moment. And the other market, of course, is Australian US dollar, just continuing to get buys as every time it comes back and pulls back to its previous Fibonacci levels and previous daily lows here, where we are seeing any pullbacks bought into. So Australian US dollar having a good lift this week alongside the gold market. We are just continuing to really buy the pullbacks currently on Australian US dollar as we see that correlation with gold. I'll just be looking out for now a break above the weekly highs again here, just above 0.9435. So Australian US dollar, certainly if we get a breakout again above 1325 today, I'll definitely be looking for a move and a breakout to the upside on Australian US dollar, and also the US dollar index to sell off. So you can see we're looking potentially, it's looking pretty weak so far today, the US dollar index. So definitely watch out for that correlation. On Monday, 8:30 a.m. Eastern time, the US core retail sales measures the change in the total value of sales at the retail level in the US. So that excludes automobiles. It's an important indicator of consumer spending and a pace indicator for the US economy. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Tuesday, the 15th of April, we have 1:30 p.m. GMT, 8:30 a.m. Eastern time. We have the US core CPI. Now, the core consumer price index CPI measures the change in the price of goods and services, excluding food and energy. So the CPI measures price change from the perspective of the consumer. It's a key way to measure change in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish, which will inversely affect gold especially. On Tuesday, the 15th of April, we have the US Empire State Manufacturing Index. So that's at 1:30 p.m. GMT, 8:30 a.m. Eastern time. That index rates the relative level of general business conditions in New York State. A level above 0.0 indicates improving conditions, below indicates worsening conditions. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar, again inversely correlated to gold. Next Wednesday, the 16th of April, we do of course have US crude oil inventories, 3:30 p.m. GMT, 10:30 a.m. Eastern time. That's very key data for those of you who are trading oil. In fact, I would definitely keep an eye on that Brent trade today. It looks like it's looking very interesting at the moment. Just catching it from my other screen. That's going to be one of our top picks for today. That data reports the number of barrels of crude oil commercial firms have in inventory, and commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Next Thursday, 17th of April, 3 p.m. GMT, 10 a.m. Eastern time, we have the US Philadelphia Federal Reserve Manufacturing Index. The Philadelphia Fed Reserve Manufacturing Index rates the relative level of general business conditions in Philadelphia. So a level above 0 on the index indicates improving conditions, below indicates worsening conditions. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. And next Thursday, 17th of April, we've got the US natural gas storage report. So that's very key for your natural gas trades. We had a great breakout yesterday on the reports. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst that is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector, and it's also important because the CAD is correlated to oil price. That will be your another major announcement for the energy next week, so do note that in the diary. So those are really the 6 key announcements we need to look at for the week ahead. Again, so US core retail sales, US core CPI, US Empire State Manufacturing Index, then we have US crude oil inventories, US Philadelphia Federal Reserve Manufacturing Index, and the US natural gas storage report. And of course, for everyone who'd like to find out more about our live trading room program and also our upcoming Gold and Silver Club workshops, which we have running in April and May, you can get in touch with us to find out more information on the following numbers on the screen. You can call our London office, our New York office, our Johannesburg office, or Budapest office with the numbers on the screen. Or, of course, you can request more information via office@thegoldandsilverclub.com, or very simply go to our website, www.jointhegoldandsilverclub.com. And do make sure you take advantage of our free newsletter. You can subscribe to that and receive free gold, silver, oil, natural gas, commodity news every week with live market analysis and prices. So I know a lot of you take advantage of that, so do make sure you subscribe and receive your newsletter. Okay, so there's lots to be looking at the markets today. I'm just looking at gold right now from on the screen. It is getting quite high, 1321. Keep an eye on Brent, keep an eye on gold, keep an eye on natural gas. There's lots to be looking at today. So I wish you all good luck for your trading today and as we go into next week. And we'll see you on the next one. Okay, take care, everyone. Bye-bye.